This is Eric Muathe, Muathe.com. Let's take a look at 3 stocks that have been moving over the last couple of days. As we can see, a sharp explosion for the day, up about 90% at some point. Here is the ticker symbol. I want you to pay attention as I get to the point here in this video. Take a look at the flat 50-day moving average. Take a look at the crossover of the 50 and the 200-day moving average. So all this are consistent. The other stock is JOB. Ticker symbol is right there. Pay attention to the flat moving average. In fact, we can say it's been flat for almost 2 months plus. And then take a look at the crossover between the 50 and the 200-day moving average. We have a sharp move over the last couple of days. And then there's another one that is moving again over the last couple of days. Same scenario, flat 200-day moving average, upward coiling 50-day moving average, and eventual crossover of the 50 and the 200-day. You get an explosive swing trade opportunity, and here is the ticker symbol. Now, a couple of days ago, I had made another video reminding you of this method, which I call the Muathe Virgin Breakout, and it plays into this concept where we have a flattening out moving average. In this case, we are seeing it is the 200-day moving average, and we can also anticipate a potential crossover down the road between the 50 and the 200. So this method does work for those of you looking for swing trades with a lot of potential power to the upside. Now, of course, it doesn't work in every single case, but once you understand the concept, the idea is to find the highest close. This is a daily chart, so we're going to take the highest daily close while we have a flat moving average, and the moving average is flattening out right here. Don't forget that this moving average had been coiling lower over a period of many months, if not years. So the only way this can go flat and subsequently at some point start coiling to the upside, and I'm talking about the 200-day moving average, the only way you can influence the 200-day moving average is by this sharp daily closing highs. That's the only way you can influence a moving average that was trending lower, and especially a big time moving average like the 200-day moving average. Here we can see it goes flat, and the only way it can coil up is with a sharp price acceleration, which is where now you can take advantage of that possibility by buying the breakout. And of course, the breakout in this example is the entry right here. Remember, this is a method that is applicable for any trading instrument. There's going to be some links in the description of the video if you want more information. This is Eric Muathe, Muathe.com. Love and light, light and love. Namaste.